Hi you guys, welcome back to the show. Today we're going to talk about something that people have asked me about, the REITs. What is a REIT? A REIT is a real estate investment trust. Gives you access to invest into real estate without having the money you need for down payment. Talking about it next, Firefighter Financial Toolbox. Welcome back you guys. We're talking about REITs. REITs are real estate investment trusts. What is a REIT? REIT is kind of like a mutual fund. They were set up by Congress in 1960 to give all Americans access to buy real estate. They realized that most people don't have enough money. Heck, most people don't have enough money to make a down payment for their own house, let alone enough money they need to buy real estate. Now, the reason they did that is to give everyone access to real estate by investing in it. It's a corporation that has to have shareholders. It has to invest at least 75% of assets in real estate. At least 75% of those, the income made from their assets has to come from real estate. And they get a tax break from Congress because they have to pay out 90% of their income as dividends to their shareholders. This is where it becomes important for us because we as shareholders of this REIT get either a monthly dividend check or a quarterly check, more commonly quarterly, but there are some that pay monthly. There's two different kinds of REITs. The first kind is equity REITs. Equity REITs are the ones that invest in actual true real estate property. They have real estate properties that buy apartment buildings, that buy medical facilities, hospitals, that sort of thing. Some buy storage facilities, some buy parking lots, some buy, you name it, they buy it. And usually the real estate investment trust will specify what they invest in, okay? Now there is another type of REIT called a mortgage REIT, and what they do is they make their money off the interest for mortgage-backed securities. What makes them attractive as an investor? Well, the high dividends. The average dividend on a REIT is between 7 and 10+%. Pretty attractive, right? Especially if you're getting that every quarter. Here's the kicker though, because they pay out 90% of their dividends to their shareholders, they are not subject to long-term capital gains. So when the dividends come, they're always taxed as ordinary income. So important thing you need to remember if you're going to invest in REITs is do never invest in a REIT in a taxable account. You always want it in either tax deferred or tax free, because tax deferred you're going to pay ordinary income when you get it out anyway. Now, I personally hold some in my Roth because I can get all the dividend payments, and it's going to be tax-free when I take it out. But that's just the way I do it. Always keep in mind taxes when you're doing any kind of investing. It's especially important with REITs. All right. So, as I said, the thing that REITs do is they offer you the opportunity to own real estate without becoming a landlord. Now, the nice thing is I can own real estate and I can buy it for one share if I want. So I can have that, I can have a little piece of real estate market to diversify my portfolio without having to be a landlord, have to worry about fixing toilets that break down at 3 in the morning, right? So that's a plus. Now, minus is, as a shareholder, you don't really have a say in the properties that they buy. The REIT is going to buy what they want based on their individual statement. Does give you the opportunity to buy in low. Now, you can buy REITs as individual stocks. There are several, probably hundreds of REITs available as individual stocks, so you could buy them one share at a time. A lot of REIT stocks trade at $10 to $20 per share, so a low cost to buy in. If that's not your cup of tea, you want a broader thing, you could invest in either a REIT mutual fund or a REIT ETF. Common one out there is Vanguard's REIT ETF, ticker VNQ, or their mutual fund equivalent VGSLX, which is what I personally hold in my Roth. As I said, good things are high dividends. Bad things, always ordinary income. So if you don't think about the taxes when you're in it, could be detrimental. Are REITs a good idea? I think for some people they are, as long as you have the space to put them in the proper part of your portfolio, it's a good diversifier. A lot of times the stock market's up, they go down. They don't always work, and they don't always go in sync. So anyway, is it good or bad? It can be good to diversify your portfolio. It can be a simple way to add another. You have American stocks, you have international stocks, and you can own some American real estate as well. As I said, low cost to get into it. Definitely some good ideas. Do you guys invest in any REITs? If so, which ones do you do? Do you do ETFs? Do you invest in individual stocks? Let me know in the comments. Anyway, really quick overview of REITs, Real Estate Investment Trust. I hope that you got something out of this. If you're new to the show, check out my website, firefightersfinancialtoolbox.com. We try to make a video at least every week. If you have any topics that you'd like to see on here, leave them in the comments. If not, give me a like, hit the subscribe button. It's free, it doesn't cost you anything. Ring the bell, you'll get notified every time I make a new video. All right, have a great day. Thanks.